concept of dual directional trading. This is a very new concept for a lot of people. Bubba, you've been using this for a while now. You introduced it into your Saturday morning calls and your Monday strategy call about 6 months ago, I guess now, 4 months ago. And a lot of people are using it. They're finding a lot of success with it. And we want to spread the word. We want to tell people about it, explain how they can use it and use it to their benefit. And as I said, we're seeing a lot of happy customers with it, and we want to make sure that more and more people know about it. So the system, we call it the dual directional trade. We call it the ratio trade. There is an automated system for it called the ratio trader, hence the R. And it's designed to be a futures trading program, but it can use non-futures options or futures options to trade with. So before we dive in deep, I just want to hit you guys with a disclaimer. Guys, this is for education purposes only. There's risk in trading. It is not for everybody. Risk the amount of money you're comfortable with losing, and understand the risks as you get involved. It's very important to do that. And you are deciding to take your own risks. We recommend speaking to experts, financial advisors, etc., to make any of your decisions. And as always, past performance is not indicative of future results. You guys can find the full disclaimer. It's on the final page or the footer of any of our company websites, targettrading.co, bubbatrading.com, flytechtrading.com, or novatradinglab.com. It's on all of them. And then without needing too much of an introduction, we're here with Todd Bubba Horwitz. He's a 45-year trading veteran, including over 3 decades as a floor trader. I like the word legendary because you kind of are legendary on your TV, your podcasts, and your radio. Bubba speaks his mind, guys. He is a common dissenter. He is not afraid to say things that other people are uncomfortable with saying about the economy, about decision making with our government. And he's become something of a legend for doing it. A lot of the hosts love having him on board because when he's there, he says the real thing, and their ratings skyrocket because of it. You've also developed multiple option strategies, some very, very unique ones, one of which we're going to talk about today. And you've got about 15 years, a little over 15 years teaching trading to people. So not just experience as a trader yourself, but also teaching people how to do it. So just a couple of key terms before we dive in too deep that we want to make sure that everyone understands, so that when we're talking, we understand what the language is what we mean by the language that we're using. And Bubba, I'm going to ask you, if as I go through each one of these, if you can give your explanation, because you're going to be the one articulating it so that people understand exactly what you mean when you say the terms.
I got to do the dictionary first.
The first one is derivatives versus like stocks, commodities, or the underlying asset. Can you talk about the difference?
Oh, yeah. I mean, the stocks or the future, those are considered the underlying asset. Okay. The commodity, whatever the actual is. And then the derivatives are options are derivatives of an underlying stock, or there are option derivatives on an underlying future. There are option derivatives on underlying commodities. But when you're trading in the futures market, the actual future is considered the underlying, very similar to the stock, which is the underlying, which hence that is my favorite. This is my favorite trade. What you're going to see today is my favorite trade of all time. But I had to figure out a way to do it so we could do it at an effective cost. And it's very hard to do in the equity market because of the margin requirements. But this is the commodities, the futures, and the stocks are all considered the underlying. The options are the derivatives, the forwards and commodities are the derivatives. But we'll just talk about options as derivatives, stocks, commodities, and futures as the underlying security.
To be clear, there are different types of derivative options for futures. So let's say we're talking about the MES. There are the SEC type options, and there are also futures options. And they're both forms of derivatives of the underlying asset.
Well, they're CFTC and SEC controlled, but I mean, it doesn't matter.
You use the term drawdown a lot. Can you just articulate what you mean when you say drawdown?
Well, I mean, you go through periods where you go through losing trades or losing periods, and that is a drawdown. And those who've been with me for a long time know that we've gone through some drawdowns. And again, you can actually use those as a benefit in the future if you learn to understand it from the beginning. Too many people quit when they have a little bit of a drawdown and don't understand it, or are over leveraging themselves when they're trading, and then they run out of money. versus keeping yourself in a position so that you can accommodate a drawdown. And not only then, when you accommodate the drawdown, then you can actually benefit it by giving a bigger position when the probability is highest for you.
Taking advantage of the drawdown.
Yep.
Net neutral. This was actually a new term for me. When you use the term net neutral, what do you mean by that?
Well, I'm a big believer in, I don't know which way the market's going to go. Always have an opinion, but I like to let the market tell me where it's going to go. So I build positions that will pick up the direction of the market. Once it starts to make a commitment in one direction or the other, my position will benefit because it has a neutral bias as it starts, but as it moves directionally, it will get either long or short with the market. And the bigger the move, the more money I will make with the least amount of risk. That is what I always try to set up. That is, like, for those of you who are on the Saturday options call, we use the weighted double diagonal, which if you looked at the deltas on that trade, they are neutral, okay? So in other words, you're not taking a big position long or short to the market. You're taking a position that is neutral, expecting the market to do something. But if it doesn't do something and does the complete opposite, you can still make money on that particular trade.
So it's the advantage of being able to move in either direction, basically.
Well, the market will move for you. You don't have to do anything. The market will do everything for you. Okay. And in other words, if you put on a neutral trade right yesterday, well, the Nasdaq's up 300 points today, but the trade was neutral. Now the trade is really long, and you're actually capturing some of that profit with that move. Okay, because you put on something neutral that gave it a bias that once it started going past a certain point, it then becomes long the market, or conversely, if we would have been going down, it would become short the market.
And we'll dig into that a little bit more as we go further. And then one of the last ones is that the difference between manual trading versus like managed trading. The difference between someone executing in their own account and a letter of direction product, or having someone else execute for you, or automated software. It's a pretty straightforward explanation on that one. So one of the things we've tossed here is what the heck is dual direction trading? When we put that out there, we got asked that multiple times. So Bubba, can you articulate what dual direction trading is?
Well, what we're doing, I've always been a huge believer, Michael, that the key to controlling and making the most amount of money is to control the underlying security. Okay. And the underlying security would be the stock, or it would be the future, or it would be the commodity. Okay. So I put on a position, okay, and my position on the underlying side is the direction that the markets are indicating to me that they're going to go. So if I have an indication the markets are going to go down, I'm going to sell the stock, or I'm going to sell the future, okay, assuming that the market's going to go down. But I don't want to put all my eggs in that short basket at the beginning. So what I'm going to do is I'm going to go ahead and buy on the other side. And in case if I sell the stock or sell the future, I'm going to buy calls. Okay. So now I've made the trade neutral, but I'm going to buy calls on a ratio of let's say sell 300 shares or 3 futures and buy 5 calls, for example. That trade, if you know delta, if you understand what delta is, which is the expected movement of an option for every dollar move in the stock, that would tell you that you are basically net neutral. That position that I just said, 300 shares short or 3 futures short, long 5 at the money calls, is a 50 delta trade, which is like 50 shares of stock, which is virtually neutral in the real scheme. So we're putting on a trade that has a net neutral position that will make money on a big move in either direction. It'll make its biggest amount of money on the future side or the short side, because your options can go to 0 and the future can continue to go down. Okay. But it will still make money on the way up, because your 250 deltas that you're long versus the 300 you're short actually can go to 500 deltas. So you actually become long the market as the market goes up. And in fact, I have a number of those trades on now that are short the futures and long the options. And yet those positions are all making money, even though the futures are getting destroyed.
Again, we're going to show those in just a minute. So the basic concept on dual direction trading and what you're talking about with net neutral is the idea that if the market goes up, they make money. If the market goes down, they make money with the existing trade that you have on. You don't have to add additional trades. They
You
have the
don't have to do
opportunity to make
anything.
money
You
in
can
both
sit there and
directions.
let it trade, and you continue to roll out your calls because your futures or your underlying remain constant for a while. Now, somebody just asked a quick question. I'm going to address that because that is correct. Okay. The only way this trade loses money is if the markets do absolutely nothing. Okay. And you get time decayed out. Okay. But the probability and the odds of that happening are remote. Okay. It's going to happen, but they're remote. But the key is that if your position is still what you believe it should be, and we're still, let's say, overbought, okay, and we didn't get it this week, well, we're going to rebuy options for the following week. So we're going to be able to play this trade a lot longer because what you're going to find out is the margin requirement is extremely small, okay, and the opportunity is extremely large. But yes, if the stock market does absolutely nothing for the next week, then I'm going to lose on my options that I'm long because they're going to start to time decay out.
Yep. And we'll talk a little bit more on that as we go. But and just to be clear, dual directional trading is not a new thing. Forex CFDs, we do this all the time. We've got products that do this. You can use multi-instrument trading. This concept isn't new. It's the way you're setting up this format that makes it new. And this is what you're calling the ratio trade. That's the new thing. So the concept though of dual directional trading is not a new, it's not a new concept. It's being able to set it up in a net neutral
Well,
way.
I think, Michael, the difference is that when you're doing CFDs, you're doing those, you have to get out of one side to then make money on the other side. This, you don't have to get
Correct.
out of any side. You can make money on both sides of the trade, okay? Because there's a definite the difference between the markets, okay? So if the market goes up, I can eventually liquidate my long calls, take off the futures, and make my money and be done. Or if the market goes down, I can close my futures and hold the options for free. So I don't need the market to go both ways. I need the market to go either way or both. I just need it to move no matter how it moves, as long as it moves, I'm going to make money.
Direction or the other. Right. Major benefits to the ratio trade. We've already hit on a bunch of these. So the first is the defined risk. And you've talked about this. You've got the cost of the premium. Can you just articulate that a little bit?
Well, I mean, the cost of the premium, you pay a premium to trade options. And I'm going to address a question at the same time. Somebody said, you learned from me in the past never to trade futures options, you'll get screwed. That is true when you're trading naked futures options because they're too big. But when you're using the underlying security with that, okay, now it's a different trade. It's not just buying futures options. You are selling futures and you are buying the futures options against them. So I hope that makes sense to you. But again, there's a difference when you're using two vehicles, one the underlying security, one the derivative or the option, and you're combining it into one trade. Okay, now you don't have to worry. So you don't have the same exposure. You don't have the same margin cost because you have combined two products together to make one trade out of it. And that does define your risk to the cost of the options is really where your risk comes into.
Right, because you're holding an underlying asset with the commodity or the future contract, but the cost is actually because it has
The true
because the
risk,
time decay is the cost.
the
Yeah.
true risk is always going to be the time decay on the option. That's always going to be the
Right.
true risk.
Right. High potential returns, and in this is because you can actually profit in both directions. Correct?
Yes, this is a trade that we actually, using it the way we've been trading it for the last 6 months or so, what we look for first is we look to make 4,000 on the future side or the underlying side as a profit. And then normally most of the guys and gals are working orders right now to close those futures at a $4,000 profit, okay, which means that their options are getting destroyed. So it means that the trade is probably up somewhere between 1,500 and 2,000 if you get the four, okay? But then you own the options for free. So if the market should happen to make a reversal from that point, which happened last week, because we were short futures, capitalized on the short futures, and ended up long calls, and we got paid on the calls too. But again, you can then own the option for free with no risk because you know your overall exposure is exactly at any given time, you know what your overall risk is. Once you take out the 4,000, your remaining risk was somewhere between 1,500 and 2,500 on the options. That's mathematically automatic. So I've got 4,000, let's say I got 2,500 risk. So I've got $1,500 locked up, guaranteed, can't take it away from me ever.
Exactly. Exactly. So defined risk, these are the benefits we're talking about. High potential returns, market access, which is the idea that you can access multiple markets with this because of its net neutral capability. You can access multiple markets in a lower risk way, which also adds to diversification. And I think this is a big one for me, is you're trading volatility. You're trading those crazy spikes and moves that people get scared of. You have an opportunity to use them for profit here. That's the way I perceive it. You see it the same way,
No,
Bubba?
I get it and I agree. And I want to, this is something important. Those of you who've learned from me know that I say that overnight trading is not something we want to do on a regular basis. Okay. You know, the markets aren't that liquid at night. There's not a lot to do. And you got to have a life as well. However, now by using the futures as the underlying, okay, you can keep your orders working all night long. So if you happen to get a big spike overnight in the right direction, it can take your futures off for you while you're sleeping, and then you'll open the options for free and still have locked in somewhere between $1,500 and $2,500. So now
Right.
you do get to trade 24 hours a day, but you don't have to watch it because you have the order working. So if you get a big swing overnight, like for example, Monday night after the inauguration, the markets were up big and then they got clobbered Monday night early before ending and rallying. Well, you could have got out of some of your positions if you had orders working and then just been long the calls for nothing. And look what happened. The short futures would have paid off and the long options would have paid off.
Exactly. Exactly. And that's another thing too, is using futures versus using, you said CFTC versus SEC.
Well, if you're
Using
using equities, it works on equities as well, but equities are too expensive. The margin costs are way too high. Plus the
right,
fact,
and you also don't have overnight markets.
well,
That's the
you
other
do
side.
have overnight margins on equities because they're bigger. But
Yeah,
futures, in the equity market, in the SEC rules, you don't get cross margin. Okay. In the futures market, I have negotiated with our firm to get cross margin. So to put on one of these trades, the overall margin would be somewhere in the $2,000 range to be short 3 crude oil and long 5 crude oil calls. Okay. The total margin for that would be about $2,000.
I think that's awesome. And you said that's through CTG.
Through CTG. Okay, because
So,
it takes away, you get cross margin coverage. The calls cover up the short future. So your margins are, again, somewhere in the, let's say we'll make it a wider range, somewhere between 1,500 and 5,000. That'll cover everything. Okay.
yep. And the beautiful part of that is that gives you that lower barrier to entry to the market, which is ironic that was our next one as we were coming to the benefits. Yeah, that's a huge play, but they're protected too because the positions are protecting themselves
Well, they're
because
protected.
of
They
the
have the right to pull that trade anytime they want, right? So they can take
right,
your calls off and take your shorts off. But again, they're not
right,
worried about it. That's the reason they're willing to give you the cross margin is because they know that it's protected.
right, right. Makes a lot of sense. And one of the things you touched on earlier too that I think is important because a lot of us on this call tend to be more day traders is the idea that you have a longer timeline that you can hold over. You're going to hold overnight positions in this. You have a longer timeline to get to that profitability, to get to that volatility. You know, it doesn't have to happen in this 8-hour period. You're going to get a longer time to let the market move and show some volatility. But how does that affect the overnight margins? You do have to operate this still within the overnight margins, correct?
Well, no, you don't. That's what I'm talking about. The options cover up the overnight margin as well.
Completely. Perfect. That was
Completely.
what I was asking.
Whatever the margin is when you put it on, that is the margin. Okay.
That's
There is no
fantastic.
change in overnight because again, the options and futures trade overnight as well.
Fantastic. So let's hit up the major risks, and you've already identified this. Your biggest risk is that there's no market movement, that it's a flat market.
Right, but
And
let
what
me
we said,
address that. Let me just address that real quickly. If there's no market movement this week, I can go to next week. I still have the short futures position on. I can choose to take the loss and close the trade incomplete. But if there's no movement, that would make me assume that I still want to be either long or short the market. So I can roll that trade out to next week and
right,
leave futures alone. The difference is
Right.
these futures that I'm putting on are good all the way to the third Friday in March. Okay. So I don't have to deal with anything on the future side until I close the position. But I can continue to play with the options on a weekly basis. And like this week, we've done nothing but roll up and take profit off the table. And I still have options. Then when it comes to Friday, I'm assuming that I'm still going to want to be in the same position because the markets keep going up and I think they should go down a little bit. Then I'll sell those options and I'll buy options for next Friday.
So your big risk then, as you said, your biggest risk is the premium of those options.
That is correct. That's the only risk.
Right. So the ratio trade is basically neutral, and that's where you came to those positions. So let's talk about setting up the ratio trade. Obviously we're not going to go into super deep detail on this, but can you walk us through the basics of how this works?
Well, let's say right now I believe that the Nasdaq is overbought. Okay, so if I'm going to do it in the futures market, okay, on the micro side, I'm going to sell I'm going to sell 3 micro futures, okay, and I'm going to buy 5 calls, giving me a net neutral trade, okay, that is neutral to the market, and I can make my choice. If I'm actually a trader who trades actively, or maybe I'm using the HVAs, or I'm trading with the blow-off method, I can actually leg one side first because maybe I can grab an edge on the future side and then wait to put the options on. And again, you can do that if you choose to. I give the order out all as one order, and when CTG does it, it will be done as one order. But if you're doing it on your own occasionally, you can leg one side because you might see something in the market that indicates you might get some movement that'll be favorable to the side you're putting on, which hence will benefit the side you're going to end up using on the other side of the trade.
Perfect. And then of course you have vice versa, one way
Short
short,
futures,
long.
long calls, long futures, long puts. Okay. Short futures, long calls, short futures, long puts.
So one of the things we talked about was a couple of examples. You have one on here right now. You
I
want to
have
walk
these
them
on
through
right
it?
now. These are live trades right now that are open. Okay, and you can see that I bought in the SPY the 593 call. So if you want to do the quick math on that, the future's trading at 61.30, which is down about $4,000 on the future. The 593 call is trading right now at the 593 call is trading at $15. So I've got a $5,000 profit on the call. I've got a $4,000 loss on the future. So I've got a net profit of 1,000. Now I have a little bit less than that because I rolled it up, and you'll see in the later example, but that's exactly what's going on. So the markets are going exactly opposite the direction I thought they were going to go, and yet I'm still making money.
Right. And then you said you have, this was actually a customer one
This
right
is a
now.
member. It's in the chat room. For those who are members, you can see it. Okay, I'm going to put his name out there because it's in the chat room. Richard Smith. Okay, he's been with me for 15 years. Okay, you can watch. These are two. He's got the trades on. He's got a net profit of 3170 on the Qs and 2100 loss on the MNQ. So he's up $1,000. If he wants to close the trade right now, he's got $1,000 profit in his pocket. Now, again, he asked me what I would do, and I said I wouldn't close it because the farther it goes higher, I'm still making money on the calls, and I assume we're going to get a big pullback. So if my assumption is right to begin with, it certainly isn't going to change now. And on the SPY or the MES, he's got a profit of about 700, 600 and some dollars right now. You can close it right now, take the 600 and walk. But again, I go back to, if we believed and we sold these futures because we thought the market were going lower before, well, certainly we're not going to change now because, again, all it's done is go straight up. But yet we've still managed to be net wrong on what we thought the direction was going to be, and are still making money.
Because it's dual directional, you're making money in the opposite direction.
We're making more money in the opposite direction to cover up the losses that we took. Because, again, if it's straight one by one, then you have to take one side off and hope the other side goes your way. This, we don't need anything to happen. We just need movement in either direction.
And then again, just to stress one more time, in both the Nasdaq here and the S&P, This actually moved the opposite direction you thought it was going to move in, and he's net about $1,600 profit.
Right. He's profitable on both trades right now.
And it moved in the opposite
We're going to
direction you
put
thought
that
it was
in.
going
But
to.
yeah, again, the objective of this trade is to get some good movement, okay? Because you can make money either side. Because again, even though my bias was to the short side, and your bias is always to what you do with the underlying or the future. So we were selling the futures, okay? So we're always biased short. However, you get a big enough rally, the short overtakes the long, and the market, you then become long the market, okay? But again, I'll repeat, the biggest amount of money made on this trade is if it goes down. But now we're in a position that we still believe that the direction is correct, okay? So we've made some money. We're covered up to the upside. If it keeps going up, we're going to keep making money. But now if we get a big hammer and a big sell-off, we're going to make a ton on the way back down.
Exactly. Exactly. So how do we get the ratio trade strategy into your trading program? We've got three ways that you can do it, and each way has its benefits and each way has its flaws. So the first method is you can manually take the trade following the signal. Those of you guys that are in the options trading program, that's the OTP, that's the Monday night calls, the Saturday strategy call, and the emails and signals that go along with it. Bubba's identifying the trades in those and the changes to the trades as you go, and you can manually follow those trades. The second is you can have access to that program and you can also learn the details of the trade and how to set it up for yourself. This is called the Comprehensive Options Program. This is the Tuesday night class. It is a 10-week class that once you buy it, you have a lifetime subscription to it. You also get access to the options trading program, so you get the manual signals as well. So you're learning, you're not just getting the signal of the trade with that, but you're also learning how to set it up and take it for yourself without Bubba's guidance. In the beginning, of course, we all love to have him guiding us in direction, but at the end of the day, we want to be able to do this independently. The third method, which we just rolled out, this just came out 7 days ago, is we have the setup and execution done for you by a pro trader. This is called the Ratio Trader System. It's an LOD program, and I'll get into the details of that in just a minute. So the options trading program, real quick. This is you manually execute the trades in your own accounts. Now, guys, you can do this in futures for the underlying assets. You can do this with stock for the underlying assets if you wanted, but you can do this with futures, and you can do the options either with futures options or with SEC options. So you can do it with both. I personally, I see it as you can trade it all inside of one account if you do it as futures.
It's much better to trade the futures options against the futures because you get the cross margin. If you start going away from that, your margin goes up substantially.
Right, and it becomes a higher barrier to entry. Exactly. So futures and futures options is in my opinion the way to go. Bubba's obviously too. So with this options trading program, if you're going to execute it for yourself in your own accounts, you get the Saturday morning call, which are all recorded. You get the Monday strategy call, and you get the daily signal emails, which are updates on what to do and how to move. There's obviously ongoing market commentary, different signals. You get access to the chat room and all that. This includes those introductory classes. They are live for each one of those calls. And I will say this. If you're new to options trading, if you're new to futures trading, there is some language in there that does take a little while to get used to. That is, you got to learn the lingo. That does take a little bit more to get used to, but as I said, this is sort of the entry level system. It's $200 a month. You can cancel anytime. And for any of these things that I'm going to show you guys, just go to targettrading.co/webinar, and you'll have all the buy now links, or you can schedule an appointment to talk to someone about what works best for you. Second thing is the comprehensive options program. This is where you learn to do the trade for yourself. So there's the classroom side of it, as well as all of the other options programs that Bubba has. So you learn to, from very entry level, understanding things, what the terminology means, what the Greeks are, how to set up from the simplest of options trades, and buying and calling puts on a weekly basis, and the strategy for doing it through creating synthetic equities with stock or with options, through learning how to actually do the ratio trade yourself, to learning how to hedge your portfolio. It's a 10-week mentorship. It is a rolling mentorship, meaning that it's 10 weeks, there's a couple of weeks off, and then it starts over again. You get access to all kinds of awesome information in this. This is a true comprehensive program. This is everything Bubba does. It's all in that 10-week program. You do get the program accessible today for $2,500. You will also get the Saturday and Monday calls with this if you buy the program today. Okay. And by the way, one thing that's not written here, but I will tell you, you get lifetime access to it. So once you've signed up and paid for this one time, you retain lifetime access to the comprehensive options program. You can attend and go back and re-attend that 10-week small group mentorship anytime you want. And I'll tell you, there's something here that we don't talk about a lot, which is you're constantly adding new information to this. The last time you ran the comprehensive options program, you didn't teach the ratio trade. This time we're including the ratio trade in it. You've included hedging, you've included all the other programs. So this is a very comprehensive learning experience. If you are starting off and you really want to get a strong foundation, we recommend starting here. And again, you will be manually executing with this, the trades in your own accounts. And you'll learn how to do that. And it's at the targettrading.co, again, /webinar. The last one is the new thing that we rolled out. Okay. I like talking about the new thing. These get me excited. This is where the system is automated for you. You can still go in and close trades, but it's designed to be fully automated for you. The program is a letter of direction program. Again, you've got unlimited profit potential. You've got limited risk. You have a longer term to get profitable, low barrier to entry, low initial investment, because you can do both micros. You can do micros, futures on this. And again, the beautiful part about this is you don't have to learn. There's no experience necessary. You fund your account, it starts trading day one, and you're in the program. This is completely managed for you in a program called a letter of direction product. If you're not familiar with letter of direction, it's basically authorizing and introducing broker to execute the trades according to the system for you. So you're getting a professional trader trading in your account. We work with a company. We've worked with them for Bubba. How long have you been working with Capital Trading Group?
12 years.
12 years. So 12 years, longstanding company, phenomenal reputation, incredible customer service. Can't say enough good things about these guys. That would be, yes, Vicky, that would be in your StoneX accounts. That would all execute there. Okay.
Actually, just on this letter of direction, I'm telling them what to do. I'm the professional trader behind it.
Right. So it's the letter of direction goes
I'm
through,
sending the
goes through
direction.
Bubba
I'm
for it.
sending them the letter of direction and telling them what to do.
So it allows you to get Bubba's level execution, but it's done by Capital Trading. By the way, if you want to check them out, capitaltradinggroup.com. Go look them up, check their Trustpilot, check their reviews and stuff. We love working with them. And I will tell you, my experience with them over the last few years has the number one thing that I like about them is their customer service. I absolutely love the fact that I can get somebody on the phone and have a conversation with them, that it's consistently the same people, that I'm not getting bounced around to India for my help desk or anything like that. They're wonderful to work with. Yes, Jennifer is amazing. So the ratio trader, it is traded for you. We are running a special because we just rolled this out. This is actually not correct. We had any Founders Club members, you can always sign up. If you're a Founders Club member at either BUBBA Trading, Nova Trading, or Target, it's always $500 a year for you guys. We keep that price for you guys for the cost of the program. If you are not a Founders Club member, I only have 2 more early adopter licenses left. One of them sold this morning already. So those are $500 a year. After those last 2 sell, if you are not a Founders Club member, for the next 20 licenses, they go up to $1,000 a year. And that $1,000 a year is a renewable rate. So each year it renews at $1,000. After those 20 are sold, going forward, It's going to be 50, every 50 licenses will be 2,500. Now, I want to be clear, okay? The $2,500 a year licenses, we're capping the number of people that are available that this is available to. Okay. We are capping the number of licenses we're selling to maintain the integrity of the program. We're not going to sell 7,000 of these. Okay. We want to maintain the integrity of the program. So we're going to limit the number of seats that are actually available for this program. What we may do in the future is open this up to other markets and other things. But for this particular market, for this particular program, we are going to cap the licenses after we sell that last round of 50. Bubba, what markets are we trading in for the Ratio Trader LOD program?
It's going to be the mini ES or the micro ES. That'll be a financial decision. It'll be gold. It'll be crude. It'll be the euro currency, bonds and notes. And whenever the next ones become liquid enough, obviously the big key here is liquidity in the options. So as they get more liquid, we will add more products. Okay. But again, we have to wait until there's enough liquidity so we can all get in and all participate.
Yep. So, and that's a big thing, guys, is maintaining liquidity for you guys. It maintains the integrity of the trading. And Vicky, that's great news. I'll have Mike reach out to you. Thank you. Thank you. So yeah, it's a good mix. And it'll give you guys the ability to participate in a lot of different markets for it. And again, targettrading.co/ratio trader if you want to learn more about the program. And if you're interested in purchasing or scheduling, go to targettrading.co/webinar. If you go there, guys, you're going to see there's a place. If you have questions, you want to schedule an appointment and talk to one of our team members. We've got multiple guys on our team that operate in a customer service role, but each one of them are expert traders. So they know what they're talking about. You're not talking to some guy that's just pushing product. Okay. They know what they're talking about. They know what they're doing. And most of them have, actually all of them have trading accounts and trade themselves. So they do know the lingo. They know what they're talking about.
Paul, I think I can get you done. I will confirm with you, but I think I can get you done.
Yep. And Vicky, I will lock you in. Don't worry about that. So last but not least, just a quick overview. We have a lot of automated software out there, guys. A lot of different programs do different things. The new addition to that is the Ratio Trader model. Our classrooms are super unique. So if you've never been in any of our classes, we have live signal rooms where you're getting told the trade that's being taken. We've got live online classrooms. We've got live online trading rooms throughout the day. We do trade reviews. So when you do take trades, you take trades, submit them in, and our instructors go over what you did right and what you did wrong live in the classroom. We do trader checkups. We're checking up on you guys on a regular basis to see what you're doing well and what you're not. If you're not doing well with certain things, we have tutoring. We have all kinds of different programs to get you along. And of course, we always have our campus library, lots and lots of extras. We have won awards for our education system. 2 years running, we've won the Education 2.0 Conference Award for the financial services industry, which is a pretty big competition if you consider that we're dealing with some big boys. AJ, yes, you can lock it in. Absolutely, you can lock it in, and I'll have one of our guys reach out to you. So we do take a lot of pride in that, guys. Bubba, I'm going to leave the Q&A open for you. And if you want to see any of those links for the purchasing or the schedule your appointment, guys, go to www.targettrading.co. It's not .com, it's .co/webinar. And you can schedule your appointments there. You can buy now there. Your onboarding will start right after you buy, and we'll get you into the system and get you running. Thank you guys very, very much. Bubba, do you have anything else you want to go over?
No, I think it's the product. For those who know me and have been around long enough, know that I've always wanted to get to the underlying. We finally got to the fact that we can use an underlying because of the margins and the products that are available. I think this is an unbelievable program, and it's something that takes very little effort, and it can work for you while you're sleeping. So to me, there's nothing better.